Hey, what's up guys? Welcome back to another video. Today I'm going to be going over liquidity in Forex from an institutional smart money concept perspective. And yeah, so before we get into this video, I just want to say I'm not a financial advisor. And yeah, let's get straight into this. So for the people that are a little bit, new to, understanding liquidity, I can give you an example. So I'm going to be doing a support and resistance example right here. So in the market, there's such thing called support and resistance. Now, whenever there's situations like this, what retail traders are taught is to buy at support and sell at resistance. And I'm sure there's been many situations and scenarios where the market was ranging something like this in the market, and it looks pretty tempting to sell at these levels of resistance, specifically because there was nice reactions towards the downside, and buy at these levels of support because, vice versa, nice reaction towards the upside. Now, what people don't tell you is that when you're buying at these levels of support, what you're actually doing is you're creating liquidity below these levels. Now, what I mean by that is when you buy at these levels of support, where do you put your stop loss? You put your stop loss below these levels. Now, below these levels, when you're putting your stop loss, you're not the only one who's doing that. There's millions of billions of people who are actually buying at these same levels as you. So if billions of people are buying at the same level as you, right, then that means that there's going to be a lot of stop losses scattered over here. And to the banks, stop losses is like a currency, like to them, when they see a bunch of stop losses gathered in one area, they see that as money that they need to take. So what the market maker is actually going to do is they're going to imprint the idea that since the market bought up from here multiple times, 1, 2, 3, 4 times, the next time the market comes here, it's going to do the same thing. What's actually is going to end up happening is they're going to go below that level of support to hit your stops. Now this is called liquidity, when the market goes below that level of support or resistance, or vice versa, to take out all your money over here, including of billions of other people, which adds up to a lot of money. Now it's the same exact scenario for here. For the people that are selling at these levels of resistance, money is being created above, and eventually the market is going to come up here. It might reject a bit and go your way to keep you happy, and influences you to take more sell positions. But eventually what's going to happen is your stop loss is going to get smacked, because the market is going to go above to hit your stop losses. Now that we know what liquidity is, right, which is just money, in a really obvious level. That's a really short definition. Liquidity is money at a really obvious level. Now, banks take liquidity, right? The reason they take your stop loss is because when they're going one specific way, right? Let's say the market is about to trend towards the downside. What they're going to do is they're going to stop out the sellers, stop out the buyers. After they stop out the buyers, they're going to use that money so they're going to use the money of the buyers to push up, to go higher and take out the sellers. Now that the buyers and the sellers are both out of the market, a lot of people are going to be confused and scared. They're going to be fearful. They're going to think that, okay, sells didn't work out, buys didn't work out. What's going to end up happening? And this is when the market maker makes its huge move to actually start trending and makes those 100, 1,000 pip moves towards the downside. So if this was a little bit confusing, I can give a very nice example on EURUSD right over here. Actually, before I do get into that, I want to explain one more thing. Now, there's 3 type of market cycles in my opinion. So there's the expansion phase, where the market is expanding towards the upside to go higher. Expansion can also be towards the downside, right? It's the same concept, just sell side, right? So the market can either expand, or the market can manipulate, where it creates that range of people buying support and resistance, and then it stops you out, right? Stops the sellers out, and then it stops the buyers out, and then it goes its initial direction. So there's expansion, manipulation, and then the stop out. Now, if we're looking at the market, from this perspective right here on the 4-hour time frame, and we're just looking at this little bit of information, a lot of people might be a little bit confused, but I'm going to give my initial thoughts of what I'm seeing. So first thing that I'm seeing is right over here, right, where the market ended up reversing and going up and breaking various 4H levels of structure right over here. It broke many lower highs, giving us identification that the market wants to trend higher. So we can definitely say that this was the expansion towards the upside, which I'm going to highlight in blue. There you go. Now after the expansion, what did I say? I said that the manipulation happens. So in this area here, the manipulation is very simple. If you go towards the 1-hour time frame, right? And you just look at market structure right over here. There's two things that you can notice. You can notice the exact same thing that I explained above, that there's support, there's people of support buyers that are buying at these levels of support, right? So the market came in here one time, it bought up, second time it bought up, third time it bought up. So what people are going to be thinking is that the next time the market comes to this level, it's going to buy up again. So a lot of people start stacking up their buy positions at these levels. But what they don't realize is all the stop losses that are going below these levels is going to attract the market maker to go below that level, take your stop loss, and then go above to stop out the sellers. So we identified that there's a lot of liquidity that rests below these support right over here, which we can just put that right there. Now we're gonna see the money get grabbed, and right over here we can see that people, if you go back to replay mode right over here, you can see that off of this rejection right over here, a lot of people started buying at this support. After people bought at this support, they put their stop loss over here or over here. There's no way to actually tell where they put it, but from a retail trader perspective, we know that they put their stop loss 15-20 pips below. So, and then you get stopped out. So now a lot of, not just you, but billions of millions of trillions of people just got stopped out from buying these supports, and that means millions of trillions of dollars also got picked up. Now, if you look, sorry, let me actually go back right here. Now, what a lot of people end up seeing when they when they see these stop outs is two things. Either the market it does this range and then it goes down, stops you out, and then it goes up, or the market just completely ranges and then just completely just goes down like that. It doesn't go up, like this that we just showed before. So now people might be be asking, how do you get in on the move where the market stops you out and then it goes up? How do you get in on that? Now, one thing that you can do is you can go on the higher time frame, and below that level of liquidity, one thing that you can look for is an order block. Now, if you go towards the 3 hour, we're going to be looking for an order block, or 2 hour time frame, even 1 hour. Check the 1 hour. Sometimes you have to check multiple time frames to actually find the order block. And we can, okay, so right over here, check the 45, and right here, perfect, we found it. We can see that from here, from this high, from the order block, from the low to the high, we mark off this order block. We can easily see that the market, after stopping all these people who are buying over here, after the market stopped it out, it came and reacted off of the order block. So whenever you're looking at a level of liquidity or support in this case, what you should be looking for is if there's an order block below that level, because most likely the market is going to come below that level, come inside that order block, and after it comes inside that order block, it's going to go towards the upside. Or the market can completely just sell off and not go your way at all. But as a trader, our main job is to react instead of predict. So after you see these rejections over here, and then you see the break of structure on the 3 minute time frame, 1 minute time frame, like right over here, you can look for your buying opportunities. So in this case, I wouldn't have bought because this goes against my trading institution strategy and trading plan. But yeah, so now that we know that the buyers got stopped out, what's left? If we look a little bit above right over here, we can see that there's still liquidity of sellers left, right? So sellers who were selling off of this resistance touch, this resistance touch, this resistance touch, and this resistance touch here, there's so much people that are looking to sell at these levels that what does it create? It creates liquidity and money above here. So I'm expecting, so from a retail trader perspective, you're going to be thinking the next time the market comes over here, it's going to, you're going to put your stop loss around this area, and then you're going to target the next low or wherever, blah, blah, blah. So we know that the buyers are stopped out. All that's left is to stop out the sellers. So let's play the market. Let's see what it does. And by the way, we know that the market is going to continue going higher to stop out the sellers, specifically because we can see that after the move down, stopping out all the buyers, we saw that the market made one more push up, indicating there's still some bullish pressure and that the market does want to go higher. If it wants to go higher, we have to understand why. Well, it's because there's a lot of money that still rests over here. Now, if the market didn't want to stop out the sellers, then all it would do is it would completely just sell off. But in this case, it didn't. So what it means is that it wants to stop out the buyers before we actually trend in a general direction. So let's see what ends up happening. Now, right over here, we have our rejection. We have, the bearish candle stick, and now people are selling. Everyone's selling. And what ends up happening is, okay, so it goes your way for a bit, and then it ends up reversing and you get stopped out. Boom. So now, like I said, you're not the only one that actually got stopped out. There's millions of trillions of dollars that just got taken away from retail traders who are you know, selling at resistance, buying at support. Now, like I said before, when the market creates, you know, liquidity like this and is taking out, it can do two things. It can either come up like this and sell off, or it can just go up and just completely start going up. So now we can, you know, now we have a checklist. We know that the buyers are stopped out and now the sellers are stopped out. What's left? All that's left is for the market to expand towards the downside now or the upside. So what we could do is we can go on the 4-hour time frame, and what do we look for? Well, like I said before, above liquidity you want to look for order blocks. Below here we had a 45-minute order block right over here, right? And that's what the market reacted off of. So the same concept for liquidity that's getting grabbed from sell side. You want to look for an order block that you know, that's above these levels. So that could be this order block right over here that's untested, or this could be this untested level right over here. It could be one of these levels. Now, you don't know which level is going to play out, but this is why you have to wait, have your point of interest ready, and react off of what happens. So okay, so the market okay, so right over here, so the market ended up, let's actually go towards the 15-minute one more time. Right over here, we can see that after hitting the stops on all the sellers, it sold off significantly. Now if we go towards the 4-hour time frame, right, we can see that after it hit the stops on people and sold off, it didn't actually come into one of these order blocks, right? But we can still see the overall concept of people getting stopped out and then the market trending. So right over here, what do we see? We see the market expanding. After expanded, what did we do? We saw that the market created liquidity from the buys and the sells. Now the buyers got stopped out and then the sellers got stopped out. And then the market made its initial trend towards the downside for over 147 pips. So then we can say that this was the manipulation. This area here was the manipulation. So here, this is the market expanding, this is the market manipulating, and then this is the market re-expanding after stopping the buyers out and the sellers out. So we didn't get an entry specifically because the market didn't actually end up hitting into our levels. But what happened after that? After the market re-expanded, what do we see? We see a re-expansion. We see that the market ended up breaking this high, right? After we broke the high, this, you know, tells you that there's a lot of significant bullish pressure. So we can definitely say that this was the expansion towards the upside. Now, what did we end up doing? Boom. If you go before this and you check the 1-hour time frame, let's actually delete everything now, and you check the 1-hour time frame, what do we see? We see the same exact situation play out. We see that there's liquidity of buyers right over here. People are buying these support touches, right? The market came to this level 1 time, 2 times, 3 times, 4 times. 4 times it came towards this level, and each time it bought up. So all the retail traders are thinking is, the next time the market comes here, I'm going to buy again. But what they don't know is that liquidity is being created, and the market is going to have to take your stop, right? So this was the expansion that we already said. This was the expansion, and we're predicting that this is going to be the manipulation. And all that's left is to stop the buyers out, and then the sellers out, and then find our way where the market's going to go either up or down. So all that's left is take the liquidity of the sellers, and you can go on the 15-minute to get a better idea of that. And right over here, if you draw a zone, it's pretty known that, you know, people are going to be selling at these levels. Sorry about that. It's pretty known that people are going to be selling at these levels right here. That's where the 1 hour. All we have to do is wait for a run above or a run below. We don't know if the market's going to take the sell side liquidity first or the buy side liquidity first. But all we know is we're not entering inside of this range. We have to wait for the liquidity to get grabbed, or from the high or the low. After the liquidity gets grabbed and everyone gets stopped out, that's when we can proceed with entering our trades. So boom, right over here, what do we see? The market makes a run below this previous level of support, and what did I say before? It reacts off of order blocks. Right over here we have this previous down candle before the up move. The market came to this order block perfectly, and this could have been a perfect entry for the people that were taking longs. And then you could target the next high, which is right over here, for 59 pips. And let's just delete this really quickly. And your confirmation for this trade is specifically that you know that the buyers of these support touches got stopped out. So you're entering on the liquidity grab, right? So then now, you know, just target the next high right over here. and we can see how this trade ends up playing out. And as you can see, the market completely just goes up higher. Now we can delete this, and now we're going to analyze what happened right over here. Going to the 1 hour time frame, we can see that the market came in here once, twice, 3 times, and then a 4th time. Now if you go to replay mode, right, and you check the 4th time, what did the market do? The market came in here, it entered everyone who's looking for sells inside of the zone. You have your stop loss above. Now the market rejects, shows you bearish engulfings, and it's basically telling you that like the market is rejecting, everything's going your way perfect. But then if you play the next few candles, what ends up happening is you get stopped out. So this tells you that this was just manipulation to make you think that the market is going to go your general direction, so you add on to your position. And when you start adding on to your position, what that means is more liquidity gets grabbed all around these levels, and it gives the market maker more a more general reason to stop you out and go above like that, like it just did right over here. So now that we know that the market is going up and the buyers are getting stopped out, all that's left is to look for an order block at one of these highs above this level. So like we said before, we have 2 levels. We can watch this order block right over here, right? We can watch this order block, or we can watch this order block right over here. So one of these levels are going to have to play out. Now this one obviously did not play out. As we can see, it completely brushed past that level, blasted past it. We still have our second level, which is right over here. We can see automatically after the sellers got stopped out, the market came into this level and showed us rejection. Now if we drop down towards the 15-minute time frame, what we can also see, or even sorry, the 5-minute time frame, what we can see is that right over here we have, right, the market comes in, and what does it do? It breaks structure. We get a break of structure of a previous higher low right over here. We can see that the market pushed up, made a higher low, pushed up. We broke this previous higher low, and this is identifying bearish pressure in the market coming in. All that's left is for the market to retest this previous order block right over here. Now we can delete this now, obviously. And now if you go towards like the 1-minute time frame, you can see right over here we actually got this push. So I'm gonna go back right over here. So you can see that after highlighting that order block, which I did on the 5-minute, right, all we did was, after the break of structure, all we did is wait for price to come back into this level. So entry would have been on the open of this order block right here, and stop loss can either be the the wick high, or it could be the order block high. It does not matter. For me personally, I just put it at the wick high for 8 pips, and then your TP can either be at the low over here. Doesn't matter. With TPs, I hope you guys know where to set take profit. It's pretty simple. Now we play the market, it comes in our zone, comes back in our zone one more time, and then boom. Now let's analyze what actually ended up happening. We can see that after the market, let's actually go to the line chart to get a better idea of what happened. We can see that after the market ended up expanding right over here, right? After the market expanded, we can see that it created the manipulation, just like we said before, right over here. This is the manipulation. Now I'm going to highlight this as red, and boom, we see the manipulation. After the manipulation, we have the stop out of the buyers, and then the stop out of the sellers. Now that we know that the buyers and the sellers are stopped out, this is when the banks are mostly going to start getting involved in real trades into those big 200 pip moves towards the downside, right? Because we want to get in on the expansion, just like over here. The market expanded towards the upside, right? Make this blue. And then after expanded, we created the manipulation right over here. The buyers got stopped out, the sellers got stopped out, and what ended up happening? We created a big move for 134 pips. After that expansion, the people got stopped out, what happened? Over here, we created the expansion. Manipulation happened right over here, and then the stop out. Right over here, the people got stopped, the sellers got stopped. Now what's left is just for the market to expand and make the huge move towards the downside. Now where can the market go? The market can either go to test this level right over here, specifically because this looks like a weekly swing point, or it can go to this weekly low right over here. Right now, if you're someone who likes to hold trades for the long term, you can definitely hold this to all the way down here. Depends on how you like to hold trades. Me personally, I would have just held it up to where I showed you before, but this would have been a 26-to-1 risk to reward ratio. And just looking at how bearish the market really was, you can see it obliterated this take profit. From here, the market just continued going down, and we're most likely to make a run all the way down here. And yeah, so this is why I'm saying we want to be entering on the expansions instead of entering where the manipulation is happening. Now you can easily see, right, that how obvious these moves are. It's just that we're not trained to see these moves because of the overall retail method theology that everyone's being taught. So next time when you're looking at a trade, ask yourself these questions: is the market expanding, or is it accumulating or distributing? Accumulating, distributing. To me, it just means manipulation. A lot of Wyckoff people like to trade it. I specifically don't. It's too much for me. I like to keep things simple. But thank you guys for watching. I really hope you guys learned something new today with liquidity, the market cycle, stop outs, a bunch of things. And if you guys have any questions, please leave a comment below. I actually just created a new Instagram, so please follow the Instagram. I'm gonna be posting trades for this week. But anyways, thank you for watching. Have a beautiful day, and leave a like and subscribe.